Alright, cool. Should be live in the cut. Let's get everyone on. Jump on that link there, bro. Alright, cool. Wa alaikum salam, my bro. Yes, guys. Good evening. Why is it not showing me what's going on? Hold on. Okay, guys. Hold on. Okay, guys, I thought I'd do something different today and give you lot a live stream on YouTube so that it's not restricted with anyone, and of course no one's gonna have any problems, and also no one can interfere with my screen. You know, we've had a lot of the times where people have interrupted, and quite simply it just hasn't really, I don't really appreciate that. Yeah, so this way it makes it a lot easier. So if you're new to the channel and you haven't subscribed already, then please smash that like button and subscribe. What I'm gonna do today, because DM is not available, is I'm going to be leading tonight's Outlook and Gems call. For those of you inside the community, you will know this is DM's call, and he does exceptionally well at these calls. So I hope I can live up to his expectation and help you guys when it comes to providing you with some gems and my outlook. Okay, so I'm gonna give it another 30 seconds to see if we can get some more members in the chat. Mr. Joseph, Latazia Joseph, thank you for the subscription. I appreciate you. But guys, look, let's give it a couple more minutes to let people load up in here. In the chat section, I need you guys to put in there, I need some W's in the chat, man. I need to see who's actually active, who's ready to learn. This one is going to be an interesting one. I haven't done one of these before, so this is going to be a good one for you guys. I promise you. I promise you that. So yeah, let's get some W's in the chat. I feel like the chat box. Oh, is it? So we have a delay. So how do I keep up with it?
I don't know if it's your YouTube settings or what.
Oh, is it? Okay. Just saying it now. Yeah, cool. All right, no worries. So guys, look, I've got a bit of a delay. Didn't realize that. There's a delay in the chat, but that's okay. That's okay. There's a delay, but as long as there's W's, I can see them coming through now. I think there's a 15-second delay, so no problems, no problems. Let's just keep getting those W's. What I'm going to do today is I'm first going to give you guys my outlook on gold. I'm going to give you guys a bit more of a educational understanding on what's happening with the war and what we should be focusing on, and then based off of that we can get a bit more deeper into learning something. If you haven't already subscribed, smash the like button. There's tons of value on this channel. If you haven't already subscribed, subscribe. You know the vibes, this lit side. Yeah, appreciate you guys every single time. Let's get 100 members in here. Let's get 50 members in here at least. It says 34 until my thing refreshes. I'm not gonna know, but it's 34 members. We usually get 50 members each night. Let's see if we can break that. Let's see if we can get 60 today, inshallah. Okay, cool. Let's get into this. All right, guys. Now look, gold. Can you do weekly outlook on US 10? Yep, I'll get into that, my bro. As long as you've subscribed, Pavan SR. If you hit that subscription button, my bro, the world is your oyster. If you don't hit that subscription button, then yeah, I don't know, save it. But yeah, anyway, cool. So what's currently been happening? Let me fill you guys in. Now, whilst I've been preparing this call, the reason why the call was a tiny bit late is because there was some breaking news, which actually has a huge impact on gold and what we can expect to happen at the start of this week. Now, regarding gold, the Trump administration plans to announce a coalition to escort ships through the Strait of Hormuz. For those of you who don't know, Iran owns the borders for the Strait of Hormuz, which is like a Nile, you could say. It's a river now. It's an alley passage, and it provides 20% of the world's oil population. Thank you for those subscribing. It provides 20% for the world's oil population, and Trump has just come out, his administration team has come out and said they plan to announce a coalition to escort ships through the Strait of Hormuz. So what they're saying is Iran has closed the borders, but we're going to force it back open. And if they do that, of course, this is going to be positive for gold, for oil, and this is going to be very bad for Euro USD. So this headline signals the US intent to forcibly reopen the Strait of Hormuz, and its effective closure by Iran means that the conflict is going to increase, which is the reason why the commodity will also rise. Now, if you guys can remember, on Friday, which was, what was Friday? The 13th? Friday was the 14th. Friday was the 14th. We did get a nice sell-off here. Okay, oh sorry, Friday was the 13th. Oh, it's because I'm buzzing, that's why. So Friday was the 13th. But what happened was gold, dropped over 1%, and that's because you had the US GDP downgrade and more Middle East tensions. Some of you might be thinking, why was gold just dumping off on Friday? A lot of the time, guys, when we see price dumping off or pumping, it's because of something fundamentally. There is always news behind these moves. I need you to think of these moves being pretty much like a price needs an excuse to breathe. Sorry, price needs an excuse to pump or dump. So whenever you see these news articles, these high impact news events scheduled to be released, they're just reasons for justifications for the price to pump or dump. Because if gold pumped up 1,000, 3,000 pips and dropped 3,000 pips every second of every day, people wouldn't trade it because it wouldn't be readable. It wouldn't be something that people could say, I understand what it's trying to do. It'd be unpredictable. So they used economical events, high impact news events to use as excuses to pump the price. All we have to do is be on the right side of these trades. Now, there's many different, strategies that you guys could learn. Some good, some bad, some I would use, some I wouldn't. But what I've always been a big founder and believer of is telling you guys about the easiest strategy, which I give away for free inside my 5-figure trading strategy, which you guys have access to inside the community, or even on my YouTube channel. I've got a 50-minute breakdown video of my LWV strategy. So if you get time after this video, check out my channel. It's called the LWV strategy. It's a 50+ minute video where I take my time like fine wine and I break down exactly how the session candle strategy can be very profitable for traders with little to no experience. Okay, so going into some more explosive high impact news, which is going to make the markets react, is the fact that there's been 3 explosive drones hit Three explosive drones hit Iranian opposition camps east of, forgive me if I mess this name up, Suleya Maniya in Iraq, Kurdistan, and it killed one of the fighters. Okay. Another high impact news is the fact that Iran's Media Operations Center warns residents in specific areas in Dubai, Doha, of possible attacks in coming hours. This is something that's also been publicized here in Dubai, so it's not propaganda, it's not fake news. Okay, they have mentioned here in Dubai that if you have if you're within a 1 kilometer distance of specific bases, your ass could get lit up. Excuse my French. Okay, so because of that, it does mean, again, guys, more tension is going to provide more bullish price action with gold. Okay, I'm also in a Donald Trump Telegram, because he loves the sound of his own voice. So I'm in his Telegram to keep up to date, so I can give you guys more information. But ultimately, the reason why this is important is because Iran's Media Operations Center says US military personnel are hiding in those locations in Doha and Dubai, and they urge residents to evacuate immediately. Escalating military threat targeting US personnel in major Gulf financial hubs during active 16-day conflict. This threatens regional stability and energy infrastructure. This is going to be positive for gold. We will see a bullish reaction. If these things, of course, come into fruition, hopefully they don't. I don't want the country that I'm living in to get bombed. That would be crazy. But I want to be able to make sure that I can make money regardless. Rain, snow, bomb, shower, sunshine, you name it. I need to be making some money. Okay. Now I've got a pullback area. Okay. I've got a pullback area down here at $5,000. Now, some of you might be thinking, well, Vel, why are you targeting $5,000? And that's a great question. Whenever you're trading, guys, it's always important to do a top-down analysis. What does a top-down analysis mean? Well, it means starting from the highest time frame and working your way down. Okay, when you work your way down time frames, you're going to see the picture change. If the picture is bullish or bearish, on a weekly, it could be bullish on a daily. Right, and all that simply means is the daily hasn't yet formed into the weekly picture. Okay, now off of the monthly and the weekly time frames, we can always still say that we're bullish, right? We can't really see anything here, okay, because we've been so high for so long. But as we go down into the daily time frame, when we go on here, when we go on the line graph, the line graph is the best way to view price action, because this line graph only shows you where price closed. Okay, now on the line graph, who can tell me, are we bullish or are we bearish right now? Let me know what you guys think, if we're bullish or if we're bearish right now. With gold, can you guys tell me if we're bullish or if we're bearish? Have you heard it yet? Okay. So just to help those who are new to trading, okay, what we can see here is we've got a high up here. We can see that price is pushed up here with a high. Then we came down. We've pushed up. We've come down. We've come up. So we've been making higher highs and higher lows, right? This here, inside of here, wouldn't have been a higher low, but if we was to ignore that low and we done something like this, down, up, down, up, down, up, then what we would say, someone's commented that we're bearish, someone's commented that we're bullish, someone said we haven't taken the full high. These are good questions. These are good responses, guys. They're healthy, because sometimes both people are right. It just depends on what time frame we're looking at. Okay, if you're new to the channel, guys, I need to see some more likes. How many likes are in the chat, bro? I don't even know. Can you see? I need you guys to spam the like button. You don't need to spam it. You just need to press it once. There's 40 members plus in here. Let's spam the like button, please, my guys. I know you guys are rocking with me hard. Hitting the like button just helps us improve the algorithms to get more people to come over to the Liquidity Network. And you guys are making money. That's why your friend W's in the chat. So we need to see some more likes on the video, please. So yeah, going back into what I'm saying to you guys now, I guess Pav is looking at this from a perspective where he's saying, well, this was the last higher low. Price is pushed up to make a higher high. And now price is pushed down and closed beneath it, right? I'm pretty sure that's what he's saying, which is the reason why when we look at this, okay, when we look at this green line here, now what Pav would be saying is anything below here in this orange sector is going to, let me go into a bit closer for you guys to see, yeah? Anything in this orange sector is now closed beneath this previous high. Therefore, what he is saying is this has gone from being a bearish, now what he's saying is it's gone from being bullish to bearish, okay? Pav said that we was bearish. Did he say we was bearish? There's a lot of bearish, bullish coming in now. Pav, what did he say? Someone said, yeah, he said bearish, excuse me, okay? We've got 1, 2, 3 saying bearish, 1 saying bullish with a pullback, bearish, 4 bearish, 2 bullish, 4 bearish and 2 bullish, 5 bearish and 2 bullish. We've only had 1 leg of bearish structure on a daily. To be bearish, we need a second leg of taking lows. Okay, so you're saying that, Pav, but then you're also saying we're bearish. So I just want to make sure that you're saying the right thing, that you're bearish, yeah? So we've got 5 people right now in the chat that's saying we're bearish, and we've got 2 people saying that we're bullish, right? So because we've had this structure break here, this would change the structure from being bullish to now bearish, right? And that is the reason why you could say in some cases, when we had a call last week, I told you guys I needed to see price go from this red zone here. That is the reason why we had this red zone. What is that? Oh, let me just, whatever that was. Okay, that is the reason, guys, why we needed price to come up into this red zone. If you guys remember the call I had last week, I pretty much said, hey, if we're going to get bearish price action, I mean, look, we can go into the Discord and just show the daily analysis, maybe for those who wasn't here. If we go into the Discord, just quickly, we can see here, the Discord, this was the analysis last week. Okay, the analysis in the community was this. If we push up, we're looking to sell. Okay, we're looking to sell from in here because this is our Fibonacci areas to sell from. But if we push lower, then you've still got this red line here, which is at around a $5,000 mark. So it hasn't changed since what you can see today. But if we were to buy, then I'd need price to come towards the 88%, wick that, and then push up towards the $5,200 mark. Even 5,100 right now is more of an immediate target. Okay, so what happened? Well, it reached 50%. Some could say that's the equilibrium for traders to short. Me personally, I don't ever take any trades based off of a 50% reaction. If it means I missed the trade, it means I missed the trade. But I do also agree on the fact that once price has pulled back 50% and it moves away, it is okay for it to do that. What do I mean by it's okay? I mean, if I'm waiting for price to reach 62% and it reacts off of 50, it's most likely gone, and that's just what it is. I can't catch every trade, and I shouldn't want to catch every trade, because every trade that you take is every piece of you that you can potentially break. That sounds like a poem, but that is real. Sometimes, guys, I've sent out 20 trades in a day in the community, and by the end of the day, my brain is physically tired. I'm tired. And why am I tired? Because mentally, you have to always make sure with gold that you're looking at things from the right side. If you're not looking at gold from the right angle, then you can get put in a position where you're put in a spliff. Let's just say it how it is. You're in a buy, gold drops down 500 pips. Imagine being in a trade, guys. Thankfully, alhamdulillah. Imagine being in the opposite, the wrong side of these trades. Think about it. All these sells, all these buys that we've sent out, we've been on the right side of them, right? We've been on the right side of so many of these trades. Look, there's a sell over here that we caught, right? We was on the right side to the sell. We caught this sell here. We caught this buy over here. We caught another buy here. We caught these sells here. We've been on the right side to so many trades, guys. So many, this sell here. We've been on the right side to all of these moves, and it's not a coincidence. It's not luck. It basically comes with time. It comes with understanding price action, and it comes with being confident in what you're doing. You have to believe in what you see. Okay, so it also means patience. Patience is usually the biggest factor that makes you successful. Warren Buffett says that wealth is a transfer of wealth from the impatient to the patient. Okay, so it came really close to our zone, but not close enough. So we missed out on the most ideal area to sell from. We caught other reasons and areas to sell, which, you know, was a good day for us. But ultimately, we didn't get that perfect reaction up here, and that kind of resembles how life is. Nothing is ever perfect. Now, yes, someone said in the comment section, imagine being in the wrong group. Imagine buying when this is dumping, and imagine selling when this is pumping. That is not what we're doing here, and that's why we need for you guys to smash the like button if you haven't already. Isabella, Blex, and David, thank you for the subscription. God bless you guys. So, moving on to the question that I asked you guys, if we was bearish or if we were bullish, there isn't really a wrong answer, and there isn't really a right answer. But I'm personally going to tell you guys that we're bullish. So I know there was 5 members in here. There was 5-2, right? 5 members said, hey, we're bullish, we're bearish. 2 members said we're bullish. Now, what's interesting is the members who said that they're bullish, you need to be questioning what can they see. This is how trading is going to be beneficial for you guys financially. Whenever someone sees something different to you, rather than you assuming that they're wrong, think about what they can see that makes them think that. That's what you should be thinking to yourself. What makes you see that this is bullish? Because depending on the scope, depending on the scope you have, depends on the outcome of what you're going to think this is, whether it's bearish or bullish. I'm going to help you guys all come to the same conclusion. Okay. Now, when it comes to the daily time frame here, okay, remember, guys, when we look at the overall picture, we're bullish. If I go on the line graph, I'm going to remove this fib quickly. Okay, I'm going to make it a bit more clear. I know I've got a lot of stuff on the chart here, but if we go on the line graph, okay, the line graph is going to show you that we've been bullish for years. For years we've been bullish, right? Of course, we had this all-time high, and then price came down. Now, when price came down, this really came down into an area. If I can show you guys what we're on the daily, cool. If I show you guys from here, from this low down here to this high, price came down and it wicked the 88%. Thank you for the subscription, Kasim Abbas. Salamu alaikum, my bro. Jazakallah. So yeah, look, price came down into the 88%, it wicked it, and then it pushed up. Now, I have a thing about Fibonacci's, and for those of you who are unaware, you can check out my 5-minute breakdown video, and you can get all of my settings, or you can take a screenshot of this right now, and you can get the settings yourself as well, okay? These settings, screenshot both. Okay, these settings are going to help you guys when it comes to the Fibonacci. If I'm personally buying at the 88 or 79, which is the sweet spot, or 70%, which is the G spot, if I'm buying at these areas, I'm looking to close my trade and take profit at the -14 to -27%. That's my first area. The second area is -141 to -127%. And the third area is the -200 to -250. That's $8,900 an ounce. I'm not saying this is going to get there in a day, okay? But what I'm saying is my Fibonacci numbers are golden. So hypothetically speaking here, when we're looking at what gold is doing, if I remove this fib, gold, because remember, guys, when we're looking at highs versus lows, sometimes there's higher highs and there's higher lows that you're not really meant to mark out. You can mark them out, but what do I mean by that? Well, look at it like this, guys, okay? When we saw price push up here, it came up, it came down. Came up, let me delete that. Price pushed up here, came down. Pushed up again here, came down. Pushed up, came down. From here, one would say, oh, it's closed beneath this higher low, so now it's bearish, which is the reason why when price pushes up here, it comes down, right? But if we're bearish, then we need to be bearish down to this level, and we're not. So what are we actually seeing here? What we're seeing here is price is just pulling back, ladies and gentlemen. That's what price is doing. Price is just pulling back. So price comes up, it comes down, it comes up over here, it comes down here. This is how you should be seeing it. If I can draw a better example for you guys, I'll do it like this. Price goes up, it comes down to higher low, higher high right here, higher low. Okay. Then rather than marking this higher high here to then mark this low, I mark this higher high over here. If I've marked this higher high, guys, as long as price doesn't close beneath this low, we are still bullish. Price has to pull back in order for price to continue pushing, whether it's up or down. That's a rule of thumb. Price always has to push back in order for it to go further. So even though on a smaller time frame we can be bearish, which is the reason why I said no one is wrong, no one is right, or should I say both answers are right, is because on a smaller time frame or within a smaller time period, we can be bearish. But it's a short-term bearish. It's not a long-term bullish. It's not a long-term bearish price. Okay? What makes us say that is because price has not yet closed beneath here. If price closes beneath this number, beneath this low over here, then we become bearish times 1. Then this low, bearish times 2, then this low, bearish times 3. I treat price action when it comes to structure almost like checkpoint to checkpoint. So I will go from this number, from this checkpoint to this one, meaning when price is heading down past this structure low, I'm now going to be saying, hey, we could get a reversal at the next structural level, And then when if price breaks that level, I'll be saying, hey, we could then change at this structural low. So what I'm telling you guys is I'm just being aware. I'm just setting a parameter that can help me be precautious rather than saying, oh, it's bearish, cool, I'm going to hold it, it's going to drop forever and ever and ever. That's not the case. There has to be places where price can potentially turn around from. So right now with gold, it is bearish. Okay, excuse me. Right now, price action is bearish. Yes, it is. But this, to me, inside of this whole area here is a short-term bearish price action in order for us to come down into these areas. I mean, look, guys, as long as it closes anywhere above this line here. Okay, so let's say it closes where it is here or even a bit lower. What we're now saying, 225 FX, thank you for the subscription, my bro. Appreciate you. Now, what I'm saying to you guys is this. Here, we can't say this is a higher low until price pushes up to make a higher high. Okay? If I change this so it's red so you guys can see it a bit better, and then I'm going to make it even bigger so hopefully it sticks out on the chart a bit more. Okay? Hopefully you guys can see. Okay, actually, I know what's happening here. I mean, you guys should be able to see it. It's pretty fine. So what I'm saying to you guys is this. Minimize. Don't get caught up in looking at, oh, there's a high, there's a higher low, there's a higher high. Oh, now it's taking it, now it's bearish, because the overall picture is bullish. But you can get short-term bearish price action. You can get short-term plays. Hence the reason why we send you guys shorts that don't last long. We send you buys that may not last long, right? But we send them to you because we see that we are in a pocket of space where the price action has changed. But the overall picture, if I stood up and I moved back, over here I can see the whole picture, right? That's what you need when you're trading. You need to be able to see the whole picture. You can't just be looking at half of the picture, right? Sometimes when we're trading off of our phone, we get caught up in what's happening here right now. And when we get caught up in what's happening here right now, what happens? What happens? We miss the bigger picture. We get sold a dream. We get put into a position where now, instead of us being up 1,000 pips or 500 pips in profit, price has come back down 400 pips and it's taken us out at break even. If you're up 400 or even 100 plus pips on the trade and you haven't got your stop loss in profit, whether it's 5 to 10 pips profit, then you're not taking yourself seriously. This is a game of financial literacy. This is a game of financial chess, financial wealth. Every move that we make is to make us money. We're not just taking trades for the sake of it. We're not. And if you're jumping into trades hoping that it's going to perform a miracle, then you might as well go to the lottery and buy a ticket and also hope that you can get that miracle too. Because that's not what we're doing here. We have to take losses in trading because those losses make us more experienced, make us more prepared for the wins. Some of you ask me, well, why don't you have a larger stop loss if you know the trade's going to go in your favor? Because if the price is not reacting inside of the zone that I want it to react, then that just tells me I'm wrong. I'd rather be wrong and have a sniper accuracy than have a wide range and not know where it's reacting from. It doesn't make any sense. I see traders on YouTube, they talk about 1-to-1 R&R. They're risking 100 to catch 100. It makes no sense. It makes no sense. It makes no sense. 2-to-1. They're risking 200. They're risking 100 to catch 200. It makes no sense. It makes no sense, guys. When we look at our trades and we look at the outcomes, yeah, sure, the first take profit may not be a huge amount, you know, in comparison to what you're risking. We're risking normally probably 80 pips off of a SL. And I would love for it to be 45. It used to be 45 when gold used to play ball. Now it doesn't, right? But my point is, with us being patient, we can always put ourselves in a position where we can maximize the best out of this trade. This is a 15-to-1 R&R, and it's a 45 pip SL because we took this trade off of a institutional level, right? This institutional level up here, we took it off of this move and price came down. This is on the 12th of March. I'm telling you this for you guys to understand that there's a process. And if we can have a scope, for example, this zone that I'm playing out of, this zone is as wide as 6 pips. It's a 6 pip zone. It's very, very small. Let's call it 10, just for argument's sake, yeah? The smaller the zone, the more I have to allow price to breathe in terms of my stop loss. If I have a 70 pip zone, then my stop loss has to cover that zone because it could react anywhere in that zone. But when we look at the pullback here, price from this wick upwards, that's what? 114. So that's 11 pips. That's 11 pips. Price pushes up 11 pips. So if we take a trade off of this zone and we've got 45 pips, that is what people are calling a sniper. That is what people are calling a sniper, right? So going back into the education side of things, why I'm trying to help you guys and why I think it's important is because right now there are so many tools that you can be using that can help you, but it all requires you to have patience. That's the main thing it requires you to have is patience. So going back into looking at gold and what we can expect on the open, okay? Gold on the open could push down. It could gap down. If it gaps down, we're not going to be angry, okay? And we're not going to try to trade the open either. That's what we're not going to do. But what we are going to do, once we see the right indication, is try to buy gold, providing it makes sense for us to do so. Now, I want to ask you guys, on a scale of 1 to 10, so far, how easy have you found to understand what I've been saying? On a scale of 1 to 10, 10 being very easy, 1 being, very difficult. On a scale of 1 to 10, how easy have you guys found what I'm saying? Okay, someone wrote 10. I need someone else to write. On a scale of 1 to 10, guys, how easy have you found what I'm saying? 10 being very easy, 1 being quite difficult. Because if it's difficult, I want to explain it in a better way for you. I'm here to help you guys. So, of course, if anyone needs extra help, if anyone has questions, you guys can answer these questions and I'll be sure to help you guys out, okay? Someone said in the comment section here, I think it's good people see it differently, but not if you're wrong. No, of course. I mean, the reality is this. People can look at a color. Some people can see green, some people can see blue. Right? You know when they had that dress, that purple dress, and some people see it as different colors. It's just the perception that people have. But when it comes to trading, a good way, let me see if I know how to still do it. Control Shift I. Nah, I don't know what I just done there. Into the matrix. But depending on how you see it, is always interesting because, Pav is saying he wants to see the 4 hours sweep. He wants to see the 4 hour lows taken out, right? Which No one can say that he's wrong about that. But what I'm saying is, if we don't see the 4 hours swept out, it doesn't invalidate the fact that price was bearish. It doesn't invalidate the move. Maybe we do get price pushing down lower. Price could come down, just so you guys really understand. Price could do this. It could come all the way down, not close down here, and end up closing here, and then pushing up. It could do that. And if it done that, we'd still be bullish. The structure would still be bullish because it hasn't closed beneath this low. Right? So, and that would just resemble, this move here would resemble a liquidity grab. Okay? Gold has been bullish for so long that it does need to shake a few feathers. It does need to push down lower, grab some more liquidity. And that's A-okay. Right? That is A-okay. But what we do have to take into consideration right now is when fundamental news events are taking place, the technical analysis has to take the back seat. They do line up in most cases, but we're talking about war here. We're not talking about the interest rate decision. We're not talking about the GDP or the PMI. We're not talking about the inflation reports, the CPI. We're not talking about the housing market reports, the unemployment rate. We're talking about war. We're talking about the price of a commodity going higher based off of the fact that it's being restricted in terms of its supply. These things have a huge effect. Investors right now are taking their money from one place and putting it into another place. That's what they're doing. Now, for most of you, you'll be well aware that the DXY is a correlating pair to gold, meaning if the DXY goes up, gold comes down. I've got it here on the screen for you guys. If XAUUSD goes down, then the DXY would be going up. Okay, if GBP USD, Euro USD goes down, gold would be going up. Okay, sorry, the DXY would be going up. So if the DXY goes down, gold, GBP USD, Euro USD, etc., would be going up. It would be inverse. But for my traders who have got more than a year's experience in trading, you guys will notice that the DXY hasn't been correlating to its 100%. So it's 100% correlation. It hasn't been doing that. Now I can be looking at gold and the DXY can be going up and gold can be going up. Now I can be looking at Euro USD, for example, or let me stick to gold because I'm only really trading gold. I see a lot of the times where gold is going in the same direction as the dollar and it makes no sense. But what that's saying to us is there's clearly moments where where the dollar is more, where the dollar is correlating more with gold than when it isn't. There's moments now, and this is something new. This is something that never happened 2 years ago, maybe even over a year ago. This never happened, guys. This is something that's within the past 12 months I've noticed that the DXY and the dollar no longer simultaneously correlates with gold, because it used to do that. Before, if the dollar was pushing up, gold was coming down within the same second. Now that's not happening. Before, if you was buying XAUUSD, the stock market would be coming down. Now the stock market pushes up at the same time as gold. It makes no sense. One is a risk on, one's a risk off factor. They're both pushing and going down at the same time. Think of a seesaw. When you sit on a bench, is it a seesaw? Yeah, one person at the other end. The seesaw, when you sit on this side goes up. When you sit on that side, this side goes up, right? That was meant to be XAU. That was meant to be gold against the dollar. That was meant to be commodities against indices. Now they're both going up and down at the same time. So that tells you that there is a lot of divergence in the market. What does divergence mean? It just means there's a lot of misinformation. There's a lot of miscorrelation. There's a lot of corruption, to put it simply. There's a lot of corruption. There's a lot of, deceptive. There's a lot of deception happening in the markets. And we need to be able to identify that. So on the next call, I'm going to be going over tools that can probably help you guys see the deception, because again, I understand a lot of you who are aspiring to become better traders need to understand that there are tools to help you. I grew up trading old school. I don't use any indicators, but over time I've seen the value in using specific indicators that can help me enhance my opinions when looking at a bias, whether it's bullish or bearish. For example, the one that I've told you guys about is the SVP, the session volume profile. This just helps me understand where the majority of price action is within that particular session. Okay, so based off of that, I just want to answer a couple of questions before I go into anything different or end the stream. Some lows and highs are internal liquidity. Patience makes money. That's correct. Doesn't a 4-hour sweep on? Oh, well, okay, I've read that already. Bigger picture. I agree, but I have to keep in mind when you place your stop to invalidate your trade. True war is different. That's why I wait until you have safe confluence. I need my Samsung Odyssey 57. I don't know what that is. You should be on a Apple, bro. It's Team Apple. Bigger picture always key. Will this live be available to revisit later? Yeah, I'll keep it on my channel for a couple of days and then it will get deleted. I think it's good people see it differently. Okay, cool. So I think I'm up to date with most of the chat. If you guys haven't already, smash the like button. That's all I'm asking for. That is my currency. You guys are going to pay me today by hitting the like button. Let me check how much likes I've currently got, because that's how I'm going to tell if you guys are really rocking with me or not. So I'm going on to it right now to check. There should be 45 likes. It should be. If there isn't, guys, stream's getting ended. Ended. It's 34 likes. There's not enough, guys. There's 44 members in the chat right now. I need you guys' help. If you haven't smashed the like button, we need to get that up. Someone smashed it. Here we go. We got 35. We need to get that up, guys. If we can't get that up, then you guys will have to just enjoy 40 minutes of a stream, which is fine. It's still a lot of time. You guys hopefully have learned something from this. But yeah, definitely need more likes, guys. Definitely need more likes. So yeah, if we can jump up to 44, to the same amount of viewers we got in here, we can continue. If we can't, it is currently 10 to 2 a.m. here in Dubai. I've probably got something better to be doing with my time. Here we go. We're jumping. If you guys are just joining in now, I need to see some likes, guys. I need to see some likes, chat. I need to see a few more, or I'm heading out. I'm heading out. Nine ungrateful users. Yeah. That's right. There's 9 ungrateful users. If you haven't already subscribed, smash the subscription button, guys. I'm doing as much as I can to help you guys. Yeah? That's what I'm doing. But look, 45 likes. I'll settle with that, man. I'll settle. My mom told me beggars can't be choosers. This is the currency you guys are paying me. So if you guys are paying me through liking the video, fantastic. But regardless, when it comes to understanding the DXY, understanding gold, just going back into what we've covered today, guys, it's really important to understand the significance of the correlation. Sometimes gold won't be